I wonder if you're hearing any surprises either way in this sort of pre-Powell commentary.
Not really. I guess I would say I kind of agree with what Sarah said in the last segment, that there's really not that much division here. There is division. I thought Schmid was a little more hawkish. Pat was a little more dovish. But the differences aren't big. And really, we're trying to get to neutral. We're talking about the path to neutral. I think Steve pressed on the path a little bit in the last interview with the Philly Fed president. And he didn't budge on it. He sort of said, we need to tell the market how we see that path, but we haven't really decided on what that path is. And I think that, Carl, is really what the market wants to get to the bottom of, is how quickly are we heading back to neutral? Give us some milestones, give us some landmarks, talk about the data requirements or not that get us back to something probably in the mid threes before we can say we're at neutral and things are normalized.
Right. The minutes, I wonder how stale do you think they were, and what did you make of this line where most saw increasing risks to the employment mandate?
Again, I think we're lined up perfectly for a Fed that is going to start a process of rate cuts, and that process could be expedited for a number of reasons, and I think the market is starting to price that. As we all know, I think Steve said it in his comments were about 100 basis points priced in through the end of the year, and that's only for 3 meetings. So that means at least 150 is priced in. And we got another 100 going in to the late summer of next year, and then we're sort of at equilibrium. We're at that R-star level. So there's a lot priced in, and I think the Fed's telling you they want to do this. It's really now a question of speed, timing, and in many ways, I'm not sure, as we started this conversation, I'm not sure that it matters that much whether we go quickly or we go fast. It'll matter for rate traders that want to bet on individual meetings. But for the economy, I think it's a very healthy sign. And for the market, I think it's a very healthy sign that we have a Fed that's ready to accommodate here or remove the tightening that we've been under to get this inflation back into check.
So you think they're going to pull it off? They're going to do it and preserve the economy, the soft landing?
I mean, Sarah, everything indicates that, all the haters out there that were talking about Jay Powell being the reincarnation of Arthur Burns and that this was the worst Fed in modern history, it was all wrong. I think he pulled it off. I think he's nailed it. And I think we're going to see tomorrow, some victory lap type discussion, which says, hey, we got this. We're ready to go. And we're getting back to neutral, guys. I don't know how fast. I actually... In my heart of hearts, I think there's a really cogent case to get there faster. And I don't know whether they're going to be biased that way. The minutes gave me a little taste of that. And I think we'll see as the election gets out of the way and they can not look political. I think we might start to see a case that says, let's just get to neutral. And by the way, guys, if we got to neutral faster and inflation didn't come down to 2 as fast, we could go back up for a little while.
What is neutral?
What's the problem with that?
You keep using neutral, and they use neutral, but I feel like nobody actually knows what neutral is right now.
I think you're right, Sarah. It's debatable, but I think we could at least agree it's come up. The R-stars come up in the SEP. We'll see if it comes up again in September when they release their latest dots. But my personal number is probably closer to 3.25, 3.5. I think the Fed's probably 2 3/4 to 3. As a committee, but a lot of folks on that committee have moved their long-term rate projection higher pretty significantly over the last year or so. And I think that's right. And I think that comes back to our discussion, Sarah, about a bigger balance sheet. I think a larger balance sheet at equilibrium allows for a higher rate at equilibrium. And I think we're going to have a larger balance sheet at equilibrium, even though President Schmid seems to think they're going to be taking that down a lot. I don't think that's probably the case in the end.
Hey, finally, David, I wonder if you'd field a housing question, because Steve got to it with Harker. We just got our first monthly gain on existing since February. Got the 30-year fix down to 6.5. Some of these prices are coming off records. Do you think are we in the process of unlocking?
I think there's a little bit that there's a lot more to go. I think it's a pretty important part of the equation. If we get back over the next year to that neutral level of 3.25 to 3.5, I think that's incredibly positive news for housing. And I will say, being here, listening to the Democratic platform from all the Harris folks, there's a lot of focus on housing. I don't know whether the Trump camp is nearly as focused. I don't think it is. But there's going to be a lot of focus on housing in the next year or so if Harris wins, and that could be a tailwind as well. So we look at that and we'll see on housing. But a lot depends on the election, and I really would say, to me, Jackson Hole's important, the pace is important, rates are coming down, that's important, but this election is really crucial. What's going to happen in the next 75 days, I think, is really going to define a lot of those specific questions, like what happens in housing, what happens in energy, and what happens overall on the regulatory landscape. It's a big, big deal for the outlook for these financial markets.